Hi, I'm Evaldo Albuquerque, and today I want to talk to you about moving averages. We are looking at a daily chart of the pair USD ZAR, which is the South African Rand, and we have the 20-day moving average, this green line. And the moving average is simply an average of the last X days. In this case, we're using 20 days, so at this point we just the moving average is just taking the average of the last 20 closing prices, and that's how you determine the moving average. There are three ways to use the moving average. The first and most basic one is to help you determine the direction of the main trend. So if the moving average is going up, you know that it's an uptrend. So you should be buying the currency pair because you want to trade in the same direction of the main trend. So moving average is going up and indicates there is an uptrend, so you should be buying the currency pair. And when the moving average is going lower, it indicates there is a downtrend in place, so you should be selling the currency pair. Another way that you can use the moving average is for support and resistance. Sometimes the moving average will act as resistance and support. Notice in this case that there was this uptrend. The moving average was acting as support. This day the price was trying to move below the average, but it was not able to because there was a lot of buying pressure. So the moving average in this case was acting as support. Then at this point, when the price closed below the moving average, the moving average was started to act as resistance. Notice that there were a lot of times that the price tried to move above the moving average, but it was not able to because there was a lot of selling pressure. So in this case, when we had this downtrend, the moving average was acting as resistance. So one way that you can use that is to buy when the moving average is acting as support. You can buy when the currency pair touches the moving average, and you can sell when the currency pair touches the moving average. And you can see here right now that the pair once again is trading above the moving average, and the moving average is acting as support. And the third way to use the moving average is for trading signals. You should buy the currency pair when the price closes above the moving average. So in this case, the price closed above the moving average, so this was a signal to buy. And if you had followed this trading signal, you would have caught all this big move, this big uptrend. And another trading signal here, when the price closed below the moving average, it was a sell signal. And once again, if you had followed this trading signal, you would have caught all these downtrend. The only problem with this strategy is that sometimes the price will just move sideways, like we have in this area. So when the price is moving sideways, you tend to get a lot of false trading signals. So there is a lot of whipsaw and you get a lot of false signals. So this strategy of buying when the price crosses the trend line only works when there is a strong trend in place, if there is an uptrend or a downtrend. But when the price is moving sideways, this strategy doesn't work that well. Another thing to keep in mind is that you could use a longer term moving average. So let me add here 100 days moving average. And you can see that if you're using a longer term moving average, you don't get as many trading signals, so you can avoid all these whipsaws when the price is moving sideways. But there is a trade-off, because the longer term moving average, if you're using the longer term moving average for trading signals, you're getting the trade much later than if you're using a shorter term moving average. Notice in this case, for example, you got a sell signal right here, and you didn't get a sell signal in the longer term until a couple of weeks later. So there is a trade-off. If you're using a longer term moving average, you don't get as many whipsaws when the price is moving sideways. But on the other hand, you tend to get trading signals a lot later than if we're using a shorter term moving average. So this is just something to keep in mind when you're deciding what kind of moving average to use. So I hope next time you're trading you can use some of this information to profit. That's all I have for today. Thanks for watching.